stocks are higher. Indices continued their pump here off of some good news. Some kind of expected, but still good news, which is it looks to be that we've got the big deal on the table. The European Union, the US, this trade deal, this was sort of the last domino to fall. And it puts us into this weird situation. A lot of people who have been looking at this market skeptically, I don't know if that's a word, cautiously, uncertain, a big question for a lot of people is, or has been, all these trade scares that we've been seeing, really people were worried that maybe something would fall apart with specifically like Europe and the US. But what's been really interesting is that pretty much everything has mostly gone okay in the eyes of the stock market. I mean, I would not have guessed that it would have fallen the way it did. Not fallen price-wise, but how things would have played out. We got trade deals like all over the place. Japan, China seems to be on the cards. EU, India, Canada's still a question. But the thing is, Aaron says the US won again this time. We're the US's little baby again. It does seem to be in some ways a US victory, but in some ways it's a global victory. Because if you look at, like, for example, the DAX, right? The DAX year to date has done better than the S&P 500. Look at this. The Nikkei is pulling back a little bit. This is interesting to see. Of course, why is the Nikkei pulling back today? Does anybody want to guess why that might be, or one of the contributing reasons? This is an advanced tariff question. Here is your hint. It involves trade stuff. Why is the Nikkei down? And was there something from the central bank? Let me actually clarify that. Did we get did we get something on? I don't think we did. I could be wrong. Anybody know? Here's the thing. Part of the reason I would argue for the Nikkei being down is for the same reason it shot higher. When the US and Japan had their kind of shaking of the hands, right? That made Europe look bad, right? It made things look like, okay, Japan's going to get the better deal, and they're the, competitors of Europe in terms of auto sales to the US. Now that it looks like a deal is happening for EU, right? That edge may be pulled out from, to an extent, on Japanese automobiles being sold to the US. So that's kind of why I think you're seeing a little bit of a pullback here, right? So what was like a huge advantage for Japan became not as much of an advantage for Japan. Still good. I still think, both indices, the Nikkei, the DAX, the US indices, I think they can all continue to move higher on a bigger picture note. But I thought that was an interesting kind of movement in the Nikkei today, a down move in response to potentially losing that, overt edge that they had over Europe, European car sales to the US. So just thought that was an interesting factor to think about today. The dollar index is up today. Of course, this is really interesting because you're getting multiple facets here. You're getting the euro moving lower, sharply lower today, down 0.7%. That is a good move on the euro. Take a look at the 15-minute chart. You can see we're moving with some momentum on the lower time frames. British pound pretty much flat on the day, but I thought this was interesting. The dollar gaining a lot of strength on this because, again, as Aaron put earlier, this is a bit of a victory for the US, where it's like, okay, US has maintained its role as the centerpiece to global trade. They never were not the centerpiece of global trade. They definitely still are. But look at oil today. Oil's shooting higher, right? This is telling you that people are like, okay, we've got a situation in which the dollar is reigniting strength. Oil is also moving higher. Perhaps this is a little bit of a US is okay situation. I'm curious. Yep. Well, let me see. What about TLT? Okay, TLT is a little bit lower today. Yields are a little higher, but not too much changed.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
So again, I think what this does, right, is you have all these countries that are signing deals with the US. They're saying, shares of Japanese semiconductor equipment maker plunged in early trade, maybe why the Nikkei sold. Possibly a part of it. I think a big part of it, though, like I said, Lee, I think a big part of it is, a huge component of the Japanese economy is selling like automobiles to the US. And so when they had the special deal with the US last week, right, that probably looked really good for them. And then when Europe now has potential deals on the table, actually, I haven't looked hardcore at what the EU-US trade deal, like what's the interesting. There's some negative responses to this. This might be why the euro is down sizably against the US. Europe balks at unbalanced US trade deal. Let's just take a look at this. Let's just see. US and EU have announced a framework trade deal and solidified a template for higher levies for American trading partners, imposing a 15% tariff on most EU imports. 15%. I mean, the market can handle 15%. That's not going to kill anybody. 15% appears to be the new normal, with much higher price, higher than pre-Trump levels, around 4.8% on average. Yeah, very interesting. Crucially, the agreement doesn't address President Trump's core complaints, including European digital taxes on tech giants and other non-tariff barriers. We have a deal. Interesting. Interesting. What we know and what we don't know about the EU deal. The agreement calls for a 15% tariff on many European exports to the US, including autos. Okay, so that to me is a similar deal to what Japan has with the US. So maybe that's why, again, Nikkei kind of losing their edge on that. The bloc agreed to buy $750 billion worth of American energy and increase investment in the US by more than $600 billion, as well as buy vast amounts of military equipment. Is Lockheed Martin up today? Not really. Okay. There will be zero tariffs on a range of American exports, including aircraft, certain chemicals, and select generic drugs. Okay. I mean, long story short, big picture is that the US, EU seem to be shaking hands on deals. And to me, that was, as I said, the top of the stream. It's kind of the last domino in some ways. Like, we have US and China circling a deal, EU and US circling a deal, Japan, UK. We don't have, if you're like super bearish on the indices, I think what the bears are resorting to right now is saying that the market is expensive, which is never a really good, it's not a very reliably good predictor of forward, movements in the market when the market is expensive. And what I'm talking about is the market relative to its earnings, right? The stock market. Believe it or not, it can look really expensive and then just get way more expensive before it eventually, sells off. Stocks always eventually have some sort of dumpage for some reason, right? Some big sell-off for some reason. But rarely is it just the market just says, oh yeah, no, we're overpriced, and so we're going to sell off. So I think that's why if you're looking at indices, why they keep melting higher or just kind of trending slowly higher. It's because you're in a low volatility environment. All the worries about, trade war, massive inflation, all this stuff, they're not showing up. It looks pretty good out there. We got trade deals happening. We got, the US is going to be taking in income from this. Again, you have to look at what's happening in front of you and say, look, other countries seem to be coming to the table. Deals are happening. If you're just going to be bearish just because you're bearish, be very careful with that. Now, let me be very fair to this. Am I out there buying stocks at this level? Nope. I have to wait for pullbacks. I have to be, but there's a possibility here that it may have all just been, or not may have all just been, but we may now see, now that we've had, such a push higher, a natural corrective pullback. Now that the news is out, we don't have something big to look forward to, right? Where if you have, something ahead of us that's very promising, maybe the market can keep grinding higher. I would not be surprised if trade deals and all those worries have been now kind of out of the market, right? All those worries that we saw have now kind of not materialized, and the market has seen a rally. But then what's going to bring us higher? That's the question. You have to think about this. When you're talking about indices, when everybody is optimistic, or at least in this case, the fear event has been ruled out for the most part, what's going to get us to rise higher? Well, we're going into earnings season. This week we get Apple, I believe, and we also get Microsoft, I believe. So you've got some big names reporting their earnings. That is going to be a potential catalyst if you get good earnings from companies. We saw Google smash their earnings expectations, which was great for the stock, right? I sold puts. I did an earnings play on that. Stock's a little bit higher here today. So these puts that I sold are pretty much worthless, which when you're shorting puts is a good thing. So I placed a trade on Google off of that. I will likely place some trades. Well, let me just really quick look at Microsoft. Microsoft's tricky. This stock is, in my opinion, it's a great stock, wonderful, wonderful company. Hard for me to justify buying it at these levels. Again, I like to buy stocks when they're beaten down. I don't really like to buy them when they're hitting fresh all-time highs kind of thing. Anyways, Dow Jones sitting here at the highs. Hey, Vanessa, good to see you. Hope you're doing well. What's up, Bashy? Everybody in the chat. We got Glenn in here. Good to see you too. Othmain. Everybody's here this morning. Happy Monday, guys. Yeah. So Tyrell says, new Edge Finder user here. I got a question regarding the sentiment data for top setups. When does the sentiment data refresh, weekly or daily? So that's a great question, Tyrell. So retail sentiment, these tools, let me show you. Let's go retail sentiment. So this updates every 30 minutes. However, for currencies, it's every 30 minutes. But I don't know why, but Looker Studio, if anybody has the Edge Finder, it's been giving me so many random issues this morning. I don't know why. But for indices and commodities, we actually use the options volume, which updates daily. Reason for that is that sentiment is much easier captured through options market volume when it comes to like the S&P 500 or the NASDAQ or gold than anything else. It's a daily thing we can look at. We can look at the options exchange. We could say, are people buying puts, meaning they're bearish, or are people buying calls, meaning they're bullish? We can look at that every day. And so it's a daily indicator for indices and commodities, and it is a 30-minute indicator for currencies. I hope that makes sense, and I hope that helps. Turtle traders bought specifically at 52-week highs. You're correct, Vishnu, but here's the thing. I'm not a turtle trader, and to each their own. Specifically, if you actually want to really dive into the turtle trader story, which was infamous in trading land, they did really well for a period of time, but that same strategy works well when it works well. It doesn't work well when it doesn't work well. Just like everything else, right? If you only look at a period where they do where you have clean, straight up markets where they're breaking out very nicely or breaking down very nicely and following through, that strategy there's no better strategy. If you look at a market where it goes sideways or just doesn't follow through very much, that same strategy can perform poorly. Now, again, over the long term, it can perform great. But for me personally, I'm not sort of a buy the all-time highs type person. However, I'm also aware, if you guys haven't heard this before, indices, new all-time highs oftentimes produce very strong forward-looking average returns. So when you get a break to all-time highs, if you had just bought it after the new all-time high, a lot of times you do better than just, which is a crazy concept. It's a momentum strategy. Yeah. And so for me personally, for me, it's just, it's not necessarily that I think that this market's going to go down. In fact, again, I think path of least resistance for this market to keep going up. I'm bullish on indices. But for me to place a trade that makes good risk reward sense, I have to see some kind of a pullback. Now, with this market becoming, really stretched and valuations becoming very expensive on the markets, that can happen really quick. Like, everyone thinks that when the market's in grind mode, it's hard not to feel like, yeah, this thing's just going to keep doing this. Like, it's going to do it every day. In fact, I will never forget for the rest of my trading career that when we were over here, I'm not even kidding. Like, you could not pick a better example. I was on Twitter or X or whatever, and I saw somebody comment that basically their idea was that the NASDAQ only goes up, and that their strategy, I'm not even kidding, was they quoted something like this. I'm paraphrasing, but it was something along the lines of, right now, or my trading strategy is to wake up, buy the NASDAQ, and be done. And the thing is, when the markets are in risk on mode, there's no beating that. I mean, wake up, buy the markets, you're done. Heck yeah, that sounds really easy. But again, and that lit a debate, as it always does on Twitter. But the debate was lit of this idea of, hey, wake up, buy the NASDAQ, it's easy, and the market goes up every day, until it doesn't. And those same people who get accustomed to, buying calls in the morning and making money and buying the NASDAQ, buying the S&P, it only goes up, and that they get trained into thinking that it only goes up. When you look at this as your sample size, of course you're going to come to the conclusion, I would never short, I would only buy every single day. But people who lived through 2022, or people who lived through, if you've been doing this for a long time, saw a little bit of a bear market in 2018. It was a modest or mild one. But really, the crucial examples are people who lived through, 15 years ago, who traded during that time, where you had the same story. Market just goes up all the time. It looks like a beast. .com days right before that. I mean, it's hard to deny, like, that looks like an easy thing to trade. You just buy it. Until those people wiped out and lost everything. And there were countless people who lost everything. I actually met someone who, to their credit, they're doing great now. But my dad and I went, and we stopped in this town one time. And there was a bar, and we sat down at the bar, and we just had a drink and hung out for a little bit. And we met the bar owner, and the bar owner said that he made like $1 million+ in the .com days. And remember, adjusted for inflation, that's $2 million now. I don't know, but did really, really well. And I asked him, what did you do during that time? He's like, I just bought calls every day. He's like, I was just buying calls on high risk stocks, and I was making a killing. And then I asked him what happened. He said he blew all of it. He said he blew up when the market stopped going up. And that story it echoes through trading land. People who think they're geniuses in bull markets get crushed in bear ones. And vice versa. There's people who also, in a bear market, they make a ton of money shorting stocks thinking they're a genius. And then when the market rallies, they blow up. The point is, it's easy to think you are a genius in markets when something's going right. It's very hard to have great performance over large stretches of time in different market environments. Anyone can do really well if they just bought here and they've just been buying every day. You're going to look like a genius until you get another swath lower, which is going to humble the crap out of you, right? So I don't say that I'm not hoping for that for you, but I've been humbled, and everybody in this room who has traded for a substantial period of time, if you're a profitable trader, or if you're just an experienced one still working towards profitability, you know as well as I do, the market humbles people who think they've got it all figured out. Look, I've been doing this for a long time. I don't have it all figured out. So what do I do? What do I do? Why should I even be swimming in these shark-infested waters? Well, the way to approach markets, the thing I always come back to, the core to my trading success that I've had in my personal journey, is reducing your risk, reducing your trade size. It's critical because no one knows. You may be hot right now. You may be struggling through a drawdown right now. Market environments change. And so what may be working and you feel like a genius, don't let that cause you to blow up. Learn from people who share those stories, from my experience, from people who have blown up. Learn from their experience, or you are doomed to learn it for yourself. If you're really smart, someone who's really smart, and I've tried to employ this in my own life, it's easier said than done. Really smart people learn from the experiences of others so that they don't have to go through the catastrophic experience themselves, right? In trading land, if you're risking big or you feel like you've got some system that's just killing the markets, trust me, if it seems too good to be true in markets, you know the saying. Humbles you like nobody's business. Yep. I'm telling you, man. Don't let it be you. If you're here and you're like, well, I haven't really blown up and I'm doing pretty well, then don't blow up. Just reduce your position size and be okay with the idea that I'm going to have tough times in trading. But tough times are survivable if your trade size is small. Tough times are going to blow you up if your trade size is big. Guaranteed, 100%. No one in this room who trades with, if you're risking 10% per trade, I guarantee you with time, you will blow your account. Guaranteed. The math doesn't make sense. Nothing works all the time in markets. Once you hit a bump in the road, if you're risking too big, you're going to blow up every dollar in your account. Too many people in here have experienced what I'm talking about. They know what I'm saying. Learn from us who have made those mistakes. Don't make them yourself. Risk small. It's the only way to survive. I say it every single day because I know that if I can get someone to resonate with me on that, they're going to probably save themselves a lot of money. Or learn the hard way. That's your choices. Learn from people who have done it and gone through it, or learn it for yourself painfully. So back to the indices for just a second. I've learned from my own experience, right, that chasing a market that looks like this can be very painful. Granted, I could buy this right now, and I think the probability of it going higher is actually better than it going lower. But the risk to reward profile on that just doesn't really make sense for me because I don't really have, I guess you do have like some support here. You have some soft support around this area, around 22,750. Why do I call it soft support? Well, because it's been so long since we've had a good, clean flush to the downside that I think any sort of hiccup with a market that is expensive, not just in the price, but rather the price relative to earnings. I think this index as a whole is pretty expensive. I think we could get a very, very clean, quick flush to levels like 22,000, at which point I think the risk reward becomes a lot more attractive. So you give me something like this, then I'm probably gonna probably take that trade. I'm gonna probably look for an opportunity to do so. That would be a nice pullback. I think that's probably, what is that, a 50% retracement from this kind of lower leg? No, it's actually 61.8% retracement. So somewhere in this area looks a lot more clean to me, but that's a ways away. So that's really not on the watch list this week. So indices, at least the NASDAQ, not really meeting that criteria. S&P 500, you've got some support here around 6,200. That was a base for us. Dow Jones is sitting at resistance. This one could be potentially a breakout retest opportunity. So I'll keep my eye on that one. What's your oil trade looking like, Nick? oh, give me a chance to brag about my oil trade. Why don't you? I've got my oil trade. It's still holding support. I am looking for a bigger move on this one. This is not a huge trade for me in terms of size, but the potential is here for what I think could be a nice push higher.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.